Welcome back for another weekend deep dive. My name is Justin, and in the stock market today, what we're going to try to figure out is the stock market crash over? When we reviewed the video last weekend, I was calling for the June dip to be over. We are now further into the promised land, which means we've made a new all-time high on the SP 500. And for this week, what we want to try to figure out is exactly where the market's going to go. And again, I would really appreciate if you could drop me a comment, let me know what you think. Is the stock market crash over? Is the market going to resume higher? How high are we going to go? So just as we get started here, I just want to remind everyone that this is a brand new channel. And if you're tuning in for the very first time, please just note that this review is to talk about the S&P 500 and to go through and figure out exactly where we're going to go for the week ahead. So I'm going to circle back and do a quick little summary of the S&P 500 in a minute here. We're going to have a look at the heat map and figure out what moved the market this week. We're going to have a look at the options chain review, go through the seasonality chart, have a look at the Bloomberg news. We're also going to have a look at the economic calendar, go through some ETFs, including QQQ, ARKK, BTC, and IWM. We're going to go through market moving news and finish off with some S&P 500 charting. Before I forget as well, what I want to do is thank our audience for supporting our new channel. We have a new channel here again. That is me up on the screen. You can see me right here. Hello, this is Justin. So the stock market with Justin, that's me. And what I really want to thank you is that we've had tremendous support from our Blaze Capital community on YouTube. And this new video did quite well. We got about 1.3 thousand views. And I think the video was pretty damn good. So again, thank you very much. And if you want to support our new channel, what you can do would be to, again, please smash a thumbs up, please subscribe, and just please leave a comment on the video. Sounds very simple, but these simple things go a very long way to tell YouTube that you should tell more people about this channel and this video. And I think that last weekend, the video was pretty accurate. We can see that we got that video thumbnail saying, is the June dip over? No one else is really calling for it. So here we are. Where are we? We're further into the promised land. And again, the promised land to me means that we are at new all-time highs. So here we are. We rallied dramatically. From Friday here at the close, we can see that we've now had a substantial rally. We're up by about 4%, nearly 4% off the lows. New all-time high. Oh my goodness. I believe the stock market crash is over. And one piece of evidence that I have to support this is our boys over at Goldman Sachs. What did Goldman Sachs saying? The bull market will get an additional $500 billion cash injection by the end of the year, Goldman says. Whoa. Right? We've been talking about a liquidity-driven rally, and there's all this money sitting on the sidelines for the last couple of months. Here we go! Goldman Sachs is confirming it. American families and professional money managers will drive demand for stocks for the remainder of 2021, plowing $500 billion of cash flows into equities through year-end, according to Goldman Sachs. The bank told clients it expects U.S. households and corporations to continue to add to their stock portfolios in the back half of 2021 amid a buildup of cash in money market funds, anemic credit yields, and a rebound in retail trading. We estimate that households currently allocate 44% of their assets to equities, slightly below the all-time high allocation of 46% in 2000. But high cash balances and continued retail participation in equity markets should bolster household equity demand. Global Chief U.S. Equity Strategist David Kostin said in a note published Friday. Again, if you want to read more about this specific article, we will share that link in the description. This pretty much tells the story, though, right? Look, right, $500 billion. That's a lot. One other quick article I want to go through to support my thesis is this. It's from Bloomberg. Again, this article will also be in the description if you want to look at it after the fact. And if you've not already, I would really appreciate your thumbs up. I'm going to ask a few times during the video because, again, it really goes a long way to help our channel grow. And just before I forget, last thing I would just say is that this is a brand new channel, and what you can note is that we're currently only doing these weekend deep dives, meaning they're being uploaded on Saturday. If the channel is successful and we're able to grow, we do want to continue to add on more, meaning Tuesdays and Thursday end-of-day videos. That is likely going to be later into the summer. As of right now, we got about 200 subscribers here. We're going to need a lot more than that to justify adding on more videos. We're more than happy to do it. All we got to see is that we're trending in the right direction and that people enjoy the content. So again, with that said, smash a thumbs up, subscribe to the channel, and please drop a comment. We continue to provide accurate analysis, and we appreciate your support. Reopening stocks fuel $6 trillion boom in the post-P pandemic. Again, I don't want to say that bad word. NAS 100 had worst first half in 3 years after 2020 jump. Energy and financials rally on anticipated economic growth. Whoop! There we go. Markets making new highs. So best and worst, energy stocks, financials outperform, while utilities, consumer stocks lagged. We can see it right here very clearly in the graph. Sector performance by year, we can see that energy has returned 46%, financials 25%, real estate 23%, communication services 19%, S&P 500 only 14%, right? Only a whole year's worth of gains, plus 4% halfway through the year, not bad. Remembering that we do have quarterly rebalancing happening on the 30th. We can see that the laggards here are utilities and consumer staples. Is that what's going to drive the next leg higher in the market? I don't know. Technology is lagging right here as well. So is the $1 trillion club finally going to lead the S&P? Not just rally, but lead. Let's watch. Again, if you want to read more about this specific article, it will be shared in the description. They talk about a lot of things here, right? They talk about semiconductors. They talk about Ford. They talk about winners and losers, including Moderna, L Brands, Ford, Nvidia, Biogen. Losers, including some Chinese tech stocks. There's a lot of stuff inside of here. So again, this supports my thesis as well. So we got Bloomberg and Goldman double teaming to confirm we're going to go up. We also had a $1 trillion infrastructure bill passed by President Biden this week. And we also had Powell testifying and saying, "Brr, right? We're going to print for longer." Yes. Pretty much echoing what we heard from Janet Yellen the prior week. So again, at a high level here, what we were looking for in terms of notes is that Tuesday, again, these were potentially bearish catalysts. I had a feeling they were going to be bullish. What did we get? Well, we closed at a record high on Friday. So again, we got all this news, but the reaction to the news is incredibly bullish. Why? Well, we poked through the previous all-time high, poked through that one yesterday, and then made a fresh high on Friday. Oh yeah. So again, that is on the back of new infrastructure and everything else. So the notes here said that, again, that ended up being bullish. This ended up being bullish. Why? We're at the high of the week, new all-time highs. There was a little bit between Europe and Russia, but nothing really that's affecting the American markets. And again, we're looking for that leadership out of the tech sector to lead the S&P further into the promised land. All right, let's move forward here. That's pretty much it. So let's flip back here to the S&P. And again, what I'm trying to do is simplify my presentation in these videos. So instead of straight jumping into, again, the more technical analysis of S&P, we're going to circle back and do that a little bit later. What I want to do here is provide a high-level overview. So again, just quickly looking at the chart, it's very obvious to me that we're trending up. We can also note here that, again, if we draw an uptrend, we can see that if we just remove a lot of the noise on the chart, we can clearly see we've just been pointing up. And again, zooming out a little bit, every time we touch this blue line, and the blue line for me is the 50 moving average, meaning short-term support, bounce, 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 bounce. Every time we touch that blue line, we bounce. So why are we surprised it keeps bouncing? We got 2 more years of easy monetary policy, and even after that, they're going to remain highly accommodative. There's nothing really for us to worry about as of right now. There was a lot of potential bearish catalysts, which meant that we were climbing a wall of worry. But as we sit here on June 26th, there's very little left to be bearish about. The only thing to be bearish about is that we're too bullish. So if you're bearish because we're too bullish, I don't know if you understand trends. Why? It is easier for the S&P to continue to make new all-time highs because we're at a blue sky breakout. It's just a matter of who's going to lead it higher. And again, we saw that the stress test from the Fed this week was another concern. And those reverse repos were a fantastic clue that the market wants to go up. Biggest takeaway is this, is that now we have key levels of strong support. We got strong support here at the previous all-time high, which we've already back tested and passed. That is roughly 425 SPY. We're looking at ES1 right now, which is the E-mini futures for the S&P. We can also know we got strong support at roughly 423. We were watching for 423 on our weekly chart, and strong support there. If we fall below there, we're watching for roughly 420 and then potentially down to roughly 419, which means as long as we remain above 420 SPY or 4200 SPX ES, we are bullish. And in my opinion, the stock market crash is over. So we can continue to ride, to climb the wall of worry and just keep going higher. How fast are we going to go up? I don't know. To be honest, if we went sideways or even dipped down a little bit, that's actually fine. Whatever we do, as long as we're above 4,200 and 4230 specifically, so 423 SPY, remains bullish. That's the easiest takeaway for right now. Don't need to overcomplicate it. The heat map. So again, we can see here that under the graph here that we get from Bloomberg, it tells us again what has performed the best year to date. And again, as of right now, we're recording this video on June 26th, remembering that the last calendar day of the month is going to be this week. So again, June 30th is going to be quarterly end, which means there's going to be ETF rebalancing and everything that goes along with that. So flipping back here to our heat map, we can note here that again, let's go back to, let's just zoom out for a second here, year to date. So this is the exact same thing we're looking at here for Bloomberg, right? So we can note over here that, let's pull these side by side here. So again, energy's done the best year to date, 46% as a sector. We can see individual names moving as much as like 50%, right? 50, right? 75, whoa, 27 for Chevron. So again, the complex is only up by about 46 here. Financials have done the second best here, and we see those pockets of deep green. Who was leading financials? Well, Bank of America, Wells Fargo, Schwab, right? Where's Goldman in here? Goldman Sachs, 40%. Yeah, there's Goldman leading everybody. Right? Even credit cards have done well. Everything's done well. So we see that theme very obvious here. Real estate's also done well. Communication services. Everything else is like pretty much in line here. The two takeout winners are energy and financials. As we have a look here at year to date, what we're going to try to figure out is whether or not the trend is going to continue on the shorter term. Meaning, when we look at the 3 month, 1 month, 1 week, 1 day, do we see rotation or do we see the same dominant theme playing out? Also notable here that we now see that Apple has actually flipped back to green year to date. Why does that matter? It's been red year to date for a while. We also look over here at Amazon and Tesla and note that they're back to, Amazon is back to green and Tesla is actually significantly less red. It was deep red before and it was number one decliner. There is some Tesla specific news for this week, over the weekend, 300,000 vehicles are going to be recalled in China. Stock is doing well, at least as of Friday's close, watching it closely for next week. Amazon Prime Day, I think it was a big success. We did not see headline numbers yet, but again, we all know Amazon sells. So we're seeing that all these companies here look like they want to advance. Looking at the 3 month now, we can see that, this Apple, Amazon, Tesla theme is becoming more green. Yes, that's how they've gone back to flat year to date. We can also note that, again, select banks, select healthcare are doing well, but there's no real broad-based theme. It's mostly tech, which is flipping back into the driver's seat here, which is what we want to see. In the last 1 month, the theme becomes much more obvious. Again, we look here and we see a lot more pockets of red, meaning we see red over here for banks, for healthcare, right, for pretty much everything. Industrials, basic materials. What is driving the S&P? Well, it's pretty much big tech. All right, let's look at the last 1 week. And here it's pretty much all green everywhere except for Amazon, right? How did they get Amazon down at the Prime Day? Yeah, these guys are good. Tesla led. Nike had incredible week, huge earnings, and a big sign of the reopening trade. So that's pretty much it. We can see here that the theme is pretty obvious to me. And the thing that's also very notable to me is that going into the Friday close, it's the same idea here where they rally tech up into Wednesday, fade it into Friday. So the only things which are really red on the board here in a significant way or flashing a pattern are big tech, and that's pretty much it. So again, fade them into Friday. And what we can also note is that on the last weekend's deep dive, we were calling for financials to rally into the later part of the week with that Fed stress test happening overnight on Thursday into Friday. So what does that mean? We're back to a normal operating market. Tech faded a little bit into Friday, closed slightly below that 350 area. And again, the reason why we're focusing on QQQ is because this is the ETF which is most closely tracked for technology stocks. And again, some of the companies that have the heaviest weighting in QQQ versus XLK include Apple, Amazon, and Tesla. So now that we see that over the course of like the last month, the theme is becoming much more obvious. Yeah, that's when we're noticing why QQQ made a substantial advance higher. So we're sitting here at about 349.4, but we did breach that 350 area. Incredibly strong. All right, that is a high-level overview. We've also looked at the heat map here. What I'm going to do next is flip over to the options chain. So what we want to do here is, let me just pull this over. Just want to make sure I don't share anything that is private. Why? Well, because we have a paid group. If you want to learn more about that, click on the link in the description. We're more than happy to share that with you. All right, 1 second here. Let me just pull this up. So here are the clues to the options chain for next week. And again, we're looking at SPY, which is a spider managed ETF for the S&P 500. We can note here that we got June 28th, which is going to be Monday. I've already identified the areas of interest for me. So what I note here is that we've got 35K in an open interest here at 430. I don't know whether or not they bought or closed them out. 430 is a pretty high number. Over here, we also have 56,000 in open interest at 420 for Monday. The biggest volume came in at 426 put, and we can note here we got about 60 cents in premium, so that implies 425 on Monday. We're just looking to see what's going to convert into open interest and what is going to hold. Over here we got a lot of volume too, right? From 426 all the way up to 430. So that is the clue for Monday. The bulls appear in control, but there is bear motivation for sure. So what we're trying to just figure out here is whether or not there's any clues as to what is going to happen going into the next week. Remembering that we were expecting infrastructure headlines to start on Monday, not this week. So I think that some of the stuff might have been leftover from pre-infrastructure discussions, where we were expecting talks to actually have material updates starting on Monday, which is this, June 28th. Moving forward to June 30th, and again, this is going to be the quarterly expiry on QQQ. It is only a weekly expiry on SPY. SPX, I think, has the quarterly one. I did not check. I forgot. Looking over here, I can note that going into Wednesday, we can see that the open interest tells the story here. Why? We see 36,000 in open interest at 425. We also note that we get 36,000 in open interest at 430 and at 431. The other reason why it's notable is because we got about 20,000 in volume and 20,000 in volume at the exact same strikes where we see the open interest. Are they open and closing? I don't know, but I can tell that it looks like they want us to be up here at 429, 430 going into Wednesday. It's not really asking the chart for all that much either. What does that mean? Well, let's look at SPY. And right now, SPY is sitting at about 426.6. So we look here at their calculator. Let's pull it up. What would 430 mean? So 430 divided by 426.61. Yeah, we're looking for about, right, 0.8, right? Less than 1% rally. Yeah, why? Well, 1% is going to be 4.2 points. Moving forward, so again, we clearly see the bull motivation going into the end of the month. So again, I'm seeing that maybe we're going to continue to melt higher. And another reason why we might go higher into the promised land, right? New all-time highs. For what? For everything. For everything. Everything makes new all-time highs. All right, looking out to Friday, July 2nd, we see bull continuation. So we see bull continuation here at 427 calls. And again, we note that there's the same activity on the open interest all the way up to 431. So what does this mean? We see bullish flow all the way through Friday. Let me just make sure I don't show a screenshot that did not meant to. I'll pull this back over in a second. Yeah, we also got the June monthly. So the one warning sign that I would say for me is that there's no one who's really, I'm not seeing overwhelmingly bull flow beyond this week. And what I mean by that is when I look at the July monthly chain, I'm not really seeing open interest in a significant way. Why? I don't know. But what I can note is this. When we look over here, the dollar value assigned to this, so I'm noticing that the biggest straddle, meaning that the call and put side, which has the most open interest is identified by the column all the way to the left or all the way to the right, and that just means contracts held overnight. I noticed over here that we got 94,000, and over here we got 45,000. Well, these numbers appear small, but look over here, we got $9 in premium, so that's pretty high. But there's nothing over here which is really 100,000 on the 16s. And the 16s just means the 16 strikes, meaning 8 below, 8 above. So this 420 kind of seems like the straddle. And the reason why it's important to me is because we take the premium here, 230 plus 9, that's 1130, 1150-ish. So that's roughly 431.5. Yeah, roughly 431.5. Oh, and they're already buying up here 432 and 430. Yes. So again, a straddle means that we have to either move down or up by about 11 points for this to be break even. That means roughly 410 or roughly 430. Roughly, right? Roughly. Not using exact math here. Why? I don't want to confuse you guys. Just tell you the round number-ish. There's some other order flow that I shared in Slack if you want to go have a look at that. What I want to look at next is just going to be an SPX straddle. And again, this part here is available on your Blaze Tips platform. It's also shared in the SPX channel if you want to go poke around and have a look at it. The reason why I'm looking at this is because I've been noticing that the straddles for the going into the June monthly expiry were a massive clue that we were going to go to new all-time highs. What I'm noticing here is that only on Friday are we noticing similar activity being put back on. What am I noticing here? 427, 426. This is SPX. Again, where the big boys play. Why does this matter? Look at the Prem. So they got about $200 in premium here, all the way out to September 17th, which is roughly when we're going to have the next FOMC meeting where they're going to be providing economic projections. So what this money tells me is that people are betting we're going to be having a big move going into then. Why? Well, we look here, 4270, and we got about 220 points in premium. So minus 220, that means that roughly 400 SPY or 4050 SPX or 405 SPY is the break even. They're going to need about 400 to make any money. On the flip side though, 427 plus 220, oh wow, right? Yeah, 450 SPY. Forget 430, forget 440, 450, whoop, whoop, whoop. So over the course of the next 84 days, these people are assuming we're either going to be at roughly 4,000 or at 4,500. Drop me a comment. What do you think? 4,000 or 4,500? What do you think? Tell me, let me know in the comments. All right, last thing to look at in this portion here, and checking in on time at about 21 minutes. All right, I'm actually doing okay for time, but I'm also making a mental note that I'm probably a little bit behind here. All right, let me just switch gears, slip over to this channel. There we go. Looking here at QQQ, and again, I'm focusing on QQQ because I like tech stocks. So looking over here, we got June 30th. Let me just have a quick look here. So we got June 30th quarterly expiry. Why does this matter? It's a quarterly expiry. Let me just make sure I don't have a screenshot that I'm missing here. I think I do. No, they were just uploaded in the wrong order. Here we go. So sorry about that. Here we got June 28th, which is going to be Monday. And again, what I'm noticing here is that we got zeros. What does this mean? They've likely added on new strikes. Why? Well, we got 0 and 0 and 0 and 0. I don't know why they didn't have 351 and 349, or they called them in. I don't know. I've been tracking it at 100% close. I don't know. It just seems unusual that we got zeros here on both sides. So I don't know, right? Looks like they called in both sides of that 350. That's what it looks like. I would also note that, again, the volume right here signifies that we got roughly 350 and roughly 349. So where do they want it on Monday? Well, somewhere between 349 and 350, which is roughly where we close out on Friday. Looking over here to the 30th of June, which again, noting that it's going to be the quarterly expiry, I'm noticing a big stack here at 352 with about $1 in premium, which implies 353 by Wednesday. And again, we're also looking for a bull move on SPY going into Wednesday. Right, quarterly rebalancing. Yes. And then looking out to Friday, again, I'm noticing a straddle here at 350. So 350 straddle means we got about $5 in premium. So sorry, this is not a straddle yet. I think this is going to convert into open interest, and then we're going to get that straddle, I think. So what that would imply to me is about $5 in premium. 345, 355, break even by Friday. We can also note over here that we got 30,000 in open interest and about 24,000 at 355. I'm already seeing the warning signs that at 355 could easily hit. And that wraps up our options review for this portion of the video. So what I'm basically telling you is that I'm already looking for new all-time highs. I'm looking for the $1 trillion to lead us higher, like a note down here. And I'm seeing evidence on the options chain to support that. Is this a guarantee? Of course not. But over the course of the last weeks and months, as I've been doing this options chain review, it has provided very good insight for me. Hopefully it does for you too. And if it does, please smash that thumbs up. Smush it, click on it, make it turn blue. Seasonality chart, we're going to skip that this week as it does not really matter. Let's quickly look at the world market and see how they're doing here. So I think the easiest thing for us to look at is I want to look at the DAX on TradingView, but just looking here again really fast, we note that the Dow Jones is down a little bit in the last month. All green here, micro red. I think we're going to go higher. Everything is pretty much green on the 1 month and green on the 1 year. So again, the trend is up and we're going higher. I'm just trying to make a mental note of like where I should be focusing my energy. And again, I'm just looking at the time. I was aiming for about 30 minutes on this video, so I'm already at 25. I got to go a little bit faster. Looking here for data points for this week in terms of what could actually move us. And again, I'm noticing that we're seeing very strong movement into Wednesday. Into Friday is a little bit more muted, but it is still skewed or tilted bullish. And the reason why I'm looking at that as a clue as well is because I'm noticing that we got some important data points that come into the later part of the week. We note that on Wednesday, we're going to get ADP non-farm payroll, and that is generally going to be a preview for what is going to come on Friday, Payroll Friday. This is the focal point for the North American markets trading into this next week. We also have initial jobless claims coming in pre-market on Thursday. So the reason why this payroll number and initial jobless claims matters is because of what Jerome Powell said this week. Again, their dual mandate is price stability and maximum employment. Maximum employment meaning jobs. These data points are going to provide a very good clue in terms of whether or not the market still agrees with Jerome Powell, meaning he said that basically good numbers are good, bad numbers are good. If we see a positive reaction to whatever the number is, beat or miss, and we go higher, that's the feedback that over the course of the next couple of months, we're likely going to see bullish reactions to any number, good or bad. Why? Well, a good number means that, hey, we spent our money properly, right? We printed and we got jobs. If the jobs don't come in, they can say, hey, well, we got to print more. Why? Well, the jobs aren't coming in. We still have 10 million Americans that are unemployed, right? That's the saying they're going to use. We can also note that the ECB's Lagarde is going to be speaking on Friday, at the exact same time as that non-farm payroll. What are we going to focus on? Well, again, as Americans, we're going to be focusing on, I'm a Canadian, by the way. I'm just saying Americans, meaning the American market. Lagarde is going to be in focus, but I think this is going to matter for us more. Unemployment rate, non-farm payroll. Quickly going through an ETF review. Maybe you could do this for me too. Let me know in the comments what ETF you want me to review on a weekly basis. So again, let me just make a quick note of that as well so I can actually get this done. And the reason I'm asking too is because this makes it a very easy way for you to actually drop a comment and let me know what you think. Why? I want your feedback in terms of where you want the show to go going forward. So I have a lot more of these charts shared inside of Slack. If you want to go back and have a look at those, look inside of the SPX channel. And just looking here again, we're going to look at a couple of ETFs really fast. We're going to look at financials. So financials have now had again, a pretty nice bounce off the previous high here. So again, came all the way down below the 50, power plunge all the way back up. And again, on the back of that stress test from the Fed, this looks pretty nice. Looking for a bull break above 37. And I think financials can actually continue to keep melting up. This looks nice, looks healthy. A break higher would be supportive of the S&P 500. Looking over here at XLV, which is healthcare, again, also just basically just moving up very slowly. One little dip, inverse head and shoulders, bouncing up to 50. That's bullish. Looking at QQQ, bullish. We note here that on Friday, meaning July 2nd, if we just go sideways at roughly 350 going into Friday, that's fine. We could easily push up to that 355, and even dipping down to the 345 would not technically make any damage on the chart. All it would mean is that we're no longer trending up on our absolute uptrend. We have to go try to find an uptrend to support it after. But anything above the previous all-time high of roughly 343 remains bullish because it is also above the 50-day moving average. Nice. Last thing we're going to look at here is going to be DIA. Again, also bullish here, moving back above the 50-day moving average. Taking out 350 would mean we're likely going to go to new all-time highs. Lastly, we're going to look at the dollar, DXY. The dollar, I'm not sure where it wants to go. So what I'm noticing here is that we're still seeing that cup and handle pattern. We see the handle here. We're noticing the lower wicks around the 200 DMA, meaning we're bouncing off the black line here. And again, I was looking for a bullish pattern here. And I think that the bulls and the bears for DXY both got the evidence they wanted this week. Why? Well, again, we printed money, but we didn't print as much as expected. So it is dilutive, but it's not as dilutive as we were expecting before. I don't know which way we're honestly going to go. I don't know. Could move up, could move down, potential for both. And we note that we're looking for roughly that 1% move on SPY to get us to that 430 area by Friday. If we move up by about 1%, 0.8 is actually what we're looking for. So 92.5 would add roughly 0.8% in pressure to SPY. But if we move down by about 0.8%, all it means is that we're back down here at about 91. I could easily see that happening. Losing the 200 DMA at roughly 91.5, easily cut another 50 cents. All right. And DAX. Again, we're looking at the leadership inside of the German market to know what is happening in Europe. And again, we got Lagarde speaking on Friday. This thing looks really strong. It doesn't have to do anything to remain bullish into Friday, right here. So Lagarde is going to be speaking on July 2nd, which is going to be Friday. And that corresponds right here on our chart with about 15,500 or the previous all-time high we find over here. And as long as we hold that, we're above the 50, we're trending up, and we're bullish. All right, market moving news. We reviewed that early on in the show. And now we're gonna wrap up the last part of this video. Exactly at 30 minutes, I'm feeling pretty good about how I am presenting. Remembering that there's also a private portion to this video, which is shared with our members. If you wanna learn more about that, click on the link in the description and learn more about it. Thank you. Quickly looking in here at SPY on TC2000, which is the charting software I have up right now, we can note that the weekly chart has never been more bullish than it is right now. Is it a little bit bullish? No, it's very bullish. Why? Well, we closed near the high, and there's barely a wick here. Record high, we took out everything. This looks really nice. So what we can focus on here now is, what are the levels that matter? Well, 423, that exact same area I've been pointing out on ES. So that corresponds with our previous all-time highs here and our Fibonacci extension off the October high to October low. So remains bullish. The warning signs that we had here were just that, look at all the tails here, right? So we see that when there's tails, we usually go up. So tail, 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 up, tail, 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 up, tail, tail. Oh, we're starting to go back up. Yes, we're starting to go back up. We should also actually zoom out to the monthly chart, which I've been forgetting to review sometimes because I forget. So I think what we want to focus on here for the monthly chart as well is, again, look at the candle, right? Wick, wick, wick. What does that mean? Usually it means we're going to go up more. Why? Because that's what it means. There's dip buying. So price goes down, dip buyers come in and push it back up. Price comes down, dip buyers buy it, it goes where? Right back up, higher high. Why? We see that we got a solid candle here. Sorry, a hollow candle. A hollow green candle means that we closed higher than we opened on the monthly chart. That's bullish. Yeah, it's bullish. Going into the month of July, maybe we're going to get it back to sort of roughly 418. It also corresponds with roughly that 50-day moving average that we pointed out at the beginning of the video. So we would have to really fall below 418 into early July to really have that move down. Payroll Friday is July 2nd. So remember that the new month is going to be into that Friday move. Please remember that. Looking on the weekly chart, again, we got that same 417 here. Why? Well, we close out the monthly and weekly at the same time. 417.26, 417.3. Looking on the daily chart, we can also note that, all right, I already got some extra notes on here. 390 is the all-time high connect. So again, if we do start moving down here, I guess 396 put break even. 430, 430 call break even. That's a note from a previous video, so we're just going to skip that for now because I don't want to confuse you. But looking here at our daily chart, it is very obvious we're still pointing up. We bounced perfectly off the uptrend. Another bear trap, right? Bear-fueled rally. That's why it does not take a lot of volume to push us up. Why? The bears are so eager to go short, and the bulls are more than happy to take the money and run. So as long as we remain above these key areas here, I see no reason why we can't resume even higher. Pushing down to 418 would not be bearish though. Why? We're just coming back down to retest the 50-day moving average and the uptrend, meaning anything above 420 on Friday is bullish. On the hourly chart, we know that the volume is really starting to trickle off unless we are looking at the closing candle of the day. So we're still got a clear uptrend here, nice V recovery, cup and handle, call it whatever you want. It's bullish. There we go. That's the end of the video. So with that said, I want to thank you very much for watching. And again, I'm going to ask over the course of the next couple of videos, and this is really for you. I want to go back and create the YouTube schedule we had before. If you like the videos, you want me to keep doing more of them, please smash a thumbs up, please subscribe to the channel, and please drop me a comment. I think the June dip is over. Let's be bullish, but let's remain not blindly bullish. With that said, I wish you the best of luck in this trading week. And I look forward to seeing you on next Saturday's video. Thank you very much.